Hey guys, what's up and welcome back to Econ Recaps. Starting with the benchmarks, IWM, which is the ETF that tracks the Russell 2000, climbed 1.07% today. DIA, which tracks the Dow Jones Industrial Average, climbed 0.77%, and SPY, which tracks the S&P 500, climbed 0.73% today. Looking to the sectors, the best sector today was consumer discretionary, with XLY climbing 1.52%, driven primarily by Amazon and Tesla, which jumped 1.60% and 2.39% respectively. These companies combine for a total weighting of roughly 40% of the State Street Consumer Discretionary ETF, meaning the ETF pretty much just follows them around throughout the trading day. The technology and industrial sector were close behind, climbing 1.3% and 1.23% respectively. In fact, 9 of the 11 sectors monitored by State Street were green today, with the only 2 poor performers being energy and healthcare, which basically traded flat, neither of them falling more than 0.5%. However, the star of the day today was Anthropic, who seemed to generate all of the price action by announcing that its Claude AI can now plug directly into tools that businesses already use, including Google Drive and Workspace, DocuSign, Slack, LegalZoom, and FactSet. The company also rolled out ready-made AI templates for common workplace tasks in finance, HR, and engineering, and brought in big-name clients like Thomson Reuters and the New York Stock Exchange to demonstrate real-world use. Shares of the companies named as partners rose anywhere between 0.4 and 5.3%, and a broad market index of software stocks jumped 2.4%. Hell, even cybersecurity stocks bounced back, with several names gaining 2 to 4% after suffering sharp losses on Monday related to Claude's cybersecurity tool. Similar to what we were speculating yesterday, the key takeaway is that Claude is a tool that works with existing software rather than against it, and will help grow the traditional enterprise software industry. However, it's not all good news for the AI giant, as Anthropic's CEO Dario Amodei met with Defense Secretary Pete Hegseth at the Pentagon on Tuesday over a serious disagreement about how the U.S. military can use Claude. Anthropic has drawn 2 firm lines that I think most people would agree on. 1, Claude cannot be used to mass surveil Americans, and 2, it cannot control weapons without a human. Hegseth responded by giving Amodei a short deadline of Friday at 5 p.m. to back down, threatening to cancel Anthropic's $200 million military contract and blacklist the company from working with any defense contractors in the future. To make matters worse for Anthropic, the Pentagon announced that Elon Musk's rival AI system, Grok, has now been cleared to operate on classified military networks, giving the Defense Department a ready alternative. This was crazy to me, as I think I speak for most people when I say Grok has to be one of the least well-regulated AI systems out there, as it previously went on a pro-Hitler tirade and is currently altering images of people to put them in underwear and bikinis without their consent, including minors. Regardless, the stakes are high for Anthropic. A blacklisting could scare off large corporate clients who also work with the government, putting a serious dent in Anthropic's growth plans just as the company reached a $380 billion valuation. Sticking with AI news for now, AMD and Meta announced a major long-term deal today, where Meta will use AMD's AI chips to power its data centers, with the first big shipment expected in the second half of 2026. As part of the agreement, AMD gave Meta the right to buy up to 160 million AMD shares, or around 10% of the company, for just a penny each, but only after AMD hits certain delivery and stock price milestones. This deal closely mirrors a nearly identical agreement AMD struck with OpenAI in October 2025, meaning AMD's 2 biggest AI customers have now together committed to a massive amount of its chips. AMD stock jumped 7% on the news, and analysts estimate that the full deal could be worth $90 to $120 billion over its lifetime. This shows that AMD is cementing itself as a real alternative to Nvidia in the AI chip market, which is great since the world's largest tech companies have been increasingly trying to avoid depending on a single supplier. Transitioning over to the pioneer of the crypto markets, Coinbase fully opened its commission-free stock and ETF trading to all U.S. users, offering access to more than 8,000 securities 24 hours a day, 5 days a week. To start building traction, Coinbase announced a strategic partnership with Yahoo Finance, embedding a Trade on Coinbase button directly into Yahoo Finance's stock and crypto asset pages, enabling users to move from research to live trading in a single click. Yahoo Finance will also display real-time Coinbase price data and account balances within its interface. Yahoo Finance's platform draws more than 150 million global monthly visitors, and with Apex FinTech Solutions named as the clearing, custody, and execution partner powering the back-end brokerage infrastructure, I believe that this brokerage could seriously rival Robinhood, now operating on its core turf. This also helps advance Coinbase's stated goal of reducing dependence on the crypto market cycles. Now, while most companies were green today, some lucky stocks were truly blessed with an increase to their price targets. Morgan Stanley upgraded Booking Holdings to overweight from equal weight with a $5,500 price target, a 35% increase from where the company is currently trading. JP Morgan upgraded Domino's Pizza to overweight from neutral with a $450 price target, pushing the company up 10% today to just over $414. Wells Fargo upgraded Qualcomm to equal weight from underweight, raising its price target to $150. Baird upgraded KeyCorp to neutral from underperform with a price target of $19. And finally, Seaport Research upgrades Fox Corporation to a buy from neutral with a $64 price target. However, it wasn't all good news. Deutsche Bank downgraded Blue Owl Capital to hold from buy, cutting the price target to $10 per share. BNP seemed to want to attack the entertainment sector, downgrading Comcast and Cable One to underperform with a $27 and $80 price target, respectively. With the markets thrashing back and forth with AI and tariff news, it's easy to forget that we're still in earnings seasons. But to start off, Home Depot beat Q4 estimates on both the top and bottom line. Adjusted earnings per share of $2.72 topped the $2.54 consensus, and revenues of $38.2 billion edged past the $38.12 billion estimate. The company raised its quarterly dividend 1.3% to $2.33 a share, but transaction count fell 1.6%, reflecting what management called a frozen housing environment. Looking at beverages, Keurig Dr. Pepper, as mentioned yesterday, yes, they merged back in 2018, edged past Q4 estimates on both revenue and earnings. Adjusted earnings per share of 60 cents beat the 59-cent consensus, and revenues of $4.5 billion topped the $4.37 billion estimate. Management's 2026 outlook for low double-digit earnings per share growth and around $26 billion in revenue came in slightly ahead of Wall Street's expectations, but nearly all of the upside hinges on the closing of the massive Peet's Coffee acquisition in early April. Please refer to yesterday's video for more information regarding that merger. Corporate America watched eagerly as Workday beat Q4 estimates on both top and bottom lines. Adjusted earnings per share of $2.47 topped the $2.32 consensus, and revenues of $2.53 billion edged past the $2.52 billion estimate, up 14.5% year over year. Subscription revenue grew 15.7%, and operating margins expanded to 30.6%, reflecting strong cost discipline even as the company bought back $2.9 billion in stock during the last fiscal year. However, guidance disappointed. Q1 subscription revenue of $2.3 billion and full-year guidance of just under $10 billion both came in below street expectations, and shares fell more than 6% after hours as investors focused on near-term slowdowns. Finally, looking at computers, HP beat Q1 estimates on both lines. Non-GAAP earnings per share came in at 81 cents and topped the 77-cent consensus placed by the market. Revenues of $14.4 billion grew 6.9% year over year and just edged past expectations. Shout out to all the gamers and college students out there, as the PC division did most of the heavy lifting. Personal systems revenue jumped 11% to $10.3 billion. Tune in tomorrow as it's one of the biggest earning days of the year as the market holds its breath to see how Nvidia will perform. Thank you for listening, and I'll catch you on the next Econ Recaps.